You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit Verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
I made it. I didn't think I'd make it, but I'm on Talking Real Money. I'm so excited. Hi, I'm the Talking Real Money guy along with the other Talking Real Money guy, and we want to talk real money with you because that's just what we do. I want to give you a really important phone number, though. That's 855-935-TALK, 855-935-8255. That's how you come over and visit. You visit our little get-together here, and, by the way, totally COVID safe. 855-935-TALK. I'm Don McDonald, and over there, my good buddy, Tom Cox.
And let me make sure I have this straight. COVID cases, highest they've ever been, basically, right?
Yes.
Basically, we have a president-elect. I mean, I guess there's still a debate in some quarter, but I think pretty much everyone is now, not to get into politics. Okay?
Are you allowed to say that in mixed company now?
I don't know.
All right, just checking.
The stock market, if you so believe the Standard & Poor's 500 to be the stock market, which, as you know, we don't. But if you do, it's trading at record highs. Yeah?
Mm-hmm. Okay, yeah, right. I looked. I did. I admit it. I actually looked.
There you go.
I don't look very often.
With all that going on, you in the audience are piling money into banks like cash faster than you're hoarding paper products. Which, yes, that's happening again. It's happened. Please don't get in my way when I go to Costco, because I still have to get a turkey of some size, and I'm going to get some stuff.
Or are you going to get the 1,000 roll package of toilet paper while you're there?
I guess so, to survive the
It's a gross. It's just a gross. I'm sorry.
So you're all putting money into banks because, wow, I guess because they're paying you so much. I just read the average rate on a savings account at U.S. Bank stands at 0.08. 0.08?
Well, it's better than 0.01.
And you all have about $16 trillion in banks. Now, here's the part that fascinates me beyond that. $16 trillion.
Yeah, that's a lot.
In the article, this is taken from the Wall Street Journal. They saved this for the last three paragraphs. They quote a guy named Ray Gustavus, who's a trial attorney in Jackson, Mississippi, who said, yeah, I had $7,500 in bank, and they cut the rate from, this is fascinating, 1.1 to 1, which I think is just 1/10. Anyway, so they cut it, and he decided to split his money now between the stock market and an account at a different bank that was offering more. So Ray said, I'm going to move money out of the bank and put it into stocks. Yeah. Ray, if you're listening, we really got to talk because those two things never should. This is two completely different type of investments. Your cash should be for like short-term things and your stock should be for long-term. These are not. And this is something, Don, you've talked about on the show many, many times. People believe investing is like one thing or another. It's like I'm all black or I'm all white, or I'm going to put it all in stocks or I'm going to put it all in cash and bonds. No, that's a very bad decision. And do I think it's ridiculous that you have $16 trillion in banks? Yeah, I think that's obscene. I think it's going to be very costly for you in the long haul. You should have some money in banks to pay the mortgage next month, to pay whatever bill you've
emergencies, stuff like that.
But otherwise, absolutely not. But on the other hand, Ray, baby, we got to chat because you shouldn't be moving it into stocks either if it's money for short-term needs. That's a horrible decision.
It's not just Ray, though. It's not just Ray. It's a lot of people. It's like you're either, it's black and white. You're either in or you're out. There's no shade of gray in most people's life. Just generally in life. And investing is very, very gray. And there is dark gray and there is light gray, but there really should be no black or no white. You're not all in or all out. You should be in the right amount for you personally. not based on what the market's doing. Well, interest rates are low. I should go all into the stock market. Wait, no. Do you know how risky that is?
Unless you're prepared to lose half of the money somewhere along the way, which, again, now with the economy perhaps shutting down again, stocks could be headed much lower. We don't know what's around and this is the question everybody always wants us to answer. Hey, what's going to happen with the market? Has that come up yet at the little attending thing this week?
Yeah, I'm by the way, just Tom I'm attending my brother-in-law's wedding.
400-person bash with no masks?
Yeah, no. Okay. It's a very tiny bash with lots of masks, but I'm actually in their room in the Burke Manor Inn in Gibsonville, North Carolina. So I'm plugging them. Gibsonville, North Carolina. Burke Manor Inn, lovely place. I would stay here. This is nice.
In where? What part of the country?
Gibsonville, North Carolina.
Can't
of course,
say as how I'm familiar with it. So okay,
it's not far from Raleigh. 855-935-TALK is our number. 855-935-8255. We are here to help you. That is our primary goal in life: is to help you understand how money works for your future and how you should invest it properly. 855-935-TALK.
Tom and Don are talking real money.
Before you end up buying a financial product that you'll regret later, either call us on the podcast or the show, or if you need a little more time, that's why we offer free meetings with our fiduciary advisors at Vestory with no cost, no obligation, and no high-pressure sales pitch, I promise. Just give us a call at 800-386-3004, or better yet, just set up an appointment at Vestory.com, Vestory.com.
For your real life and real future, Tom and Don are talking real money.
I can't guarantee how long I'm going to be able to be with Tom on the show today because I could get kicked out of the bridal suite any moment.
How many bridal suites have you been thrown out in your lifetime? Come on. I can only think of a couple, but still, add to the list.
This probably, let's see. No, Debbie let me stay in ours. So, yeah, okay. No, I think that, yeah. 855-935-TALK is our phone number. We're here to help you navigate what can be a very, very confusing world of money, and it's something you need. So give us a call before you make a big mistake, which most people make. 855-935-8255. And Mary, you're up. Welcome to Talking Real Money.
Hi, Mary.
Hi. Thank you. I have a couple of questions. I have money in two different retirement savings plans. One is a 403B with my old employer where I left it, and the other is a 401k with my new employer where I have a 4% match. I have the feeling that the fees on these plans are not great. I'm wondering if you can tell me whether or not it makes sense to roll over my first plan into an IRA and whether I should contribute more into my second plan or simply go into an IRA. So my first plan.
Okay, let's talk about your second plan. What is your second plan? What investment vehicles do you have?
Yeah, it's an American Funds target date.
So it's a small company, I'm guessing.
Yeah.
Yeah.
With Capital Group?
With Capital Group, yeah. American Funds, you're probably getting the American Funds without a commission.
Good. I hope so.
Yeah, she should. She should be getting the break points. But
does the expense ratio tell you what the commission is?
No, that's different.
Oh, no, but actually that helps, though. What's the expense ratio?
1.45.
What?
Oh, my mouth just dropped.
He hasn't even get gin and tonic
I got to get one of those handkerchiefs that they used to put around the jaws of dead people back in the old days. My jaw actually hurt. That's way too much money. No, yeah. Do not. What do you think, Tom? Do not put that 403B in
again. I was going to ask how much is in the 403B. How much money is in that plan?
Oh, that has more of my money.
But give us an idea. So $10, $10 million.
$171,000.
Okay, so that is $171,000. I would not take that and roll it into a plan where you're paying fund expenses of 1.45. No way. I would put that in an IRA where you could get far less expense. And by the way, here's the other part we don't know about the second plan. In addition to those fund expenses, you're paying somebody to manage the plan. In other words, there's the cost of the administration, there's the record keeping, all that stuff. We can't tell you what that runs. So, but I think I heard you say you're getting a match in the second plan?
Yeah.
Yeah, she's getting a 4% match.
I would save at least up to the match, get the free money in the second plan.
Okay.
And then do the rest of it in another vehicle. Yes, but I would take the first one, move it into an IRA. The second one, get the 4%, and again, I guess I'd look at all the funds in there too to see what the cheapest ones, because 1.45 is really outrageous.
Really high. I totally agree with Tom on I always take your match. The 403B, if you're going to transfer that should be transferred to an account at Vanguard, Fidelity, or Schwab. You should put it in a really well-diversified portfolio based on your risk tolerance. And then over and above that 4% even, if you are putting more money into your 401k above that, you might want to consider making that an IRA or a Roth IRA contribution.
Yeah. How old are you, Mary?
Okay. 61.
Okay. And how many more years are you going to work?
Probably another 9.
9 years.
Good.
Okay.
Wow. You're gonna do well. But don't put it in that account with American funds. No.
Yeah, that's crazy high expense ratio. So
they're
rolling some of what they would get paid on the commission into the. You're exactly right. They're saying, thank you. We'll take that money from so. So yeah, I'd like Don's advice there. We wish you well. Oh, I will say one thing before you go. We have expanded, and we mentioned this briefly, I think, last week before. So now if you go to TalkingRealMoney.com, we give you portfolios at Schwab, portfolios at Fidelity, and portfolios of Vanguard. 3 funds each, 1 U.S. equities, 1 international equities, and 1 bond fund. You build the right portfolio for yourself at any of those, and your cost will be, well, let's see, at 1.5, and just be like 10% or something of what you're paying. I mean, it's just outrageous.
Less than that. Less than that. Because those Fidelity funds are less than 1/10%.
Yeah, so you'd be paying way, way, way less. And you probably got better diversification, too. I mean, that's the other thing that... so we wish you well. Thank you for the call.
Yeah, and you, by the way, all of you can go find those funds at the Explore tab at TalkingRealMoney.com, which is an image of a white-haired woman listening to our podcast on earbuds. So go to that tab. That's where you'll find that. We've got 3 funds from each of the 3 groups: Fidelity, Schwab, and Vanguard. And by the way, Fidelity and Schwab are cheaper than Vanguard.
We have for a couple of decades, just told you, go to Vanguard, own a fund, and somebody finally wrote and said, Vanguard's having service issues. Number 2, why not Vanguard? Fidelity's got some very fine, so we're like, yeah, they got some great funds too. Go there as well.
As a matter of fact, the Fidelity funds are the portfolios are almost identical to the Vanguard because they're buying the total market.
Yeah. And it's easy.
855-935-TALK is our phone number, 855-935-8255. It is easy to be a part of the show. It is free to be a part of the show. And the answers you're going to get are related to your situation and we try to make everything, we don't always get it right, but we always try to answer it in what's best for you. We want what is best for you, not for us.
Yeah, this came up recently where I talked to someone who has been a decent saver. She's been a teacher, and she's already in line to get Social Security benefit and a pension. Then she had a kind of, she could either take a lump sum or put it into the Washington State TAP annuity. And frankly, sometimes it just makes sense to go ahead and put the money in the annuity. And I know that's a dirty word, but in this case,
it's a different kind of annuity. Yeah. The problem is there's so many types of annuities. Exactly. An immediate annuity is a different beast than a variable.
Yeah, she gets a pretty good hunk of money every month. Remember, as you pointed out earlier, Don, you're getting some of your own money back, but that's okay. You're in your 60s. You're going to get some of your, you're spending some of your principal. That's okay. And in this case, I think for somebody with a low risk tolerance, absolutely makes a ton of sense.
And that's the key. That's the key, though. If you have a very low risk tolerance, and by the way, if you want to find out what yours is, go take our free risk quiz at TalkingRealMoney.com. And she took it. She had a very, very low tolerance for risk. So you want something that has some guarantees and certainty. But if you're a high risk tolerance person, then you can afford to strive for those greater returns that the stock market has at least provided for about 100 years or so.
I know, it's coming up on 100. By the way, behind you, there's lurking a woman, and you're in the bridal suite. I'm a little nervous about your continuing on this
my
broadcast,
my wife just snuck in, but the next break's only a minute long, so we're okay.
Okay.
855-935-TALK is our number. 855-935-82. Stop it. Don't you dare. 855-935-8255. It's free, it's easy, it's about life and money, and we want to make both easier to deal with, okay?
Tom and Don are talking real money.
There's a science to managing money. I call it financial physics, and you can get a free copy of my easy-to-read book, Financial Physics, at talkingrealmoney.com/free, or there's an interactive version available on Apple iBooks. It's called Financial Physics, that's spelled with an F, and you can get it free at talkingrealmoney.com/free or in the Apple bookstore.
Your guides to a really great financial future. Tom and Don are talking real money.
And coming up, why you should listen to Congress for investing advice. That is straight ahead. You don't want to miss this one.
A programming tease?
Oh, yeah. How about that, huh? Actually, I was going to do a different...
That's Mr. Television. That's from the days... Coming up after the break.
I was going to give another program tease. I told my grandson I would last night because he is a dancing machine. I told him on the show today, I would say, Talking Real Money, normally heard during this time period, will be interrupted so that we can bring you Eli's dance party. But he didn't want to do it. So, no.
Wait a minute. Wait, I have a question for you, though. This is radio, right?
Oh, that's right. I was holding up the video. Yeah, okay. Yeah. So
it's a little hard to see.
I know.
All right. 855-935-TALK is our phone number. I'm at a bed and breakfast in North Carolina. Tom's in Seattle.
He's in the bridal suite, broadcasting from the bridal
Literally,
suite.
I attended a wedding.
Good for you. But how many people end up in the bridal suite? I've never had a wedding.
They offered it to me because I needed to plug in.
Okay.
I need to plug my equipment in. So the battery, I guess I could have gone on battery, but it could have died. I forgot who the caller was.
It's Jim.
No, don't even go there.
It's
I see
Jim.
you starting that look again.
I'm sorry. Let's go to the phones. That'll make
Hi,
things...
Jim. Welcome to Talking Real Money.
How we doing?
Hi, guys. Doing great.
Good.
How are you?
Very well.
Hey, real
I was
quick,
better until I talked to Tom.
Go ahead.
Oh, no. I'm sorry. My wife and I have 20 years worth of EE bonds that we bought in the military, and they're going to start hitting maximum maturity, 30 years, in June. So starting in June, every month for 20 years, we're going to have a bond that we need to do something with. It's just play money. We don't need it, but I don't want to waste it either. So where can I put that money?
Wow.
Well, okay, one, you're smart now at this juncture to wait because the interest rates are great on those things.
Yeah, exactly.
How much is coming due every month?
Oh, I'm sorry. It's a single $200 bond every month.
Okay.
So it'll be over
because there are different
$300.
denominations of bonds. So here's the deal.
Purchased at $100.
Okay, so they're all maturing at $200. That's terrific.
Sure.
What you probably, but I don't consider any money to be play money. I just don't think it's something you play with. You either buy something that you need with it or want, or you pay your bills with it or something. So you're getting $200 a month, and it strikes me as the perfect opportunity to start dollar cost averaging into mutual funds.
I mean, the other thing I would say is, do you have someone you would like to, like kids or grandkids you'd like to give the money to?
Oh, thank God, no.
Yeah. Why would he want to do that?
That was the best answer of the week. I got to say that.
Did they work on that?
Thank you. That's a great setup, Jim. Yeah, I mean, I guess. So then if it's, and I agree with Don, I don't have any play money. But again, if it was like, I don't need this money in the next 5 years, then
correct.
I would just buy the 3-fund portfolio we give you free at Schwab, Fidelity, or Vanguard. Pick one of those funds, put the first 200 in that one, pick the next month, put the next, because it's very low cost, it's very diversified. Only use the 2 stock funds and do whatever you're going to do.
Yeah, because it's found money basically, so you can afford to take risk with it at this juncture. It sounds like. So you buy the 2 stock funds, you alternate every month. You go the U.S. one month, the international the next. You set up a dollar cost averaging program. A lot of fund groups will allow you to come in under the minimum if you're going to dollar cost average in.
So just put it in equity. I got it.
Yeah,
Sounds good.
and those are free. The fund that we give you all for two stock mutual funds for each fund family. Schwab, Schwab's not a fund family, custodian. Schwab, Fidelity, and Vanguard.
No, they are a fund family, actually.
Well, that's true. They do have some.
Schwab is
them
they have their Schwab family of funds.
Yeah, I wish they didn't, but that's a whole other topic. They've struggled with those in the past. But anyway.
But we suggest their funds.
I think those are exchange traded. So when I say fund family, I still think of mutual. Anyway, it's fine. We're getting wound up here. I would just go to any of those custodians and buy the three funds that we offer there, and you get...
Or the two.
Yeah, two. In your case, just the two. Absolutely. Go for it.
Found money. 855-935-8255.
I'm going to take home this comment about the kids and grandkids, too, by the way.
Yeah, you should. Quit giving those kids... Did they do anything during that money? Heck no. Make them work for it. 855-935-8255. That is our number. And you can call it 24 hours a day if you don't get through to the show. Just call.
Tom and Don are talking real money.
Everybody needs help with their money now and again, and if you need more help than we can give in the course of this podcast or show, set up an appointment with one of our advisors for a free actual meeting with no obligation and no high-pressure sales pitch. Just go to vestory.com, that's VESTORY.com, or call 800-386-3004.
Reality radio for a really great future. We're talking real money.
Really important conversation about a really important topic called real money. I'm Don. That's Tom. Our number is 855-935-TALK. We're here every Saturday from, pretty much every Saturday.
Well, you're only doing half of the show.
Noon to 2. I'm only doing half the show. I got to get out of the bridal suite.
Okay.
They just got married. I got to leave.
Okay.
All right.
I thought I'd heard them all until then, but that's the newest one, so good job.
Tom will be here for the next hour.
Yeah,
or
so if you want to harass
podcast.
Don, call now. If you want
to harass Don, it's this hour.
If you want
to harass Tom, which is I find really a lot more fun than harassing me, that'd be the next hour. 855-935-8255. And Joey, it is your turn. Welcome to Talking Real Money.
Hi, Joey. Joey?
I thought Joey was next.
He is next.
She said Karen. All right, it's Karen next then.
My bad.
Hey, Karen, I know you don't sound a bit like Joey. Hi, Karen.
Hi, I guess that's me.
You're
that's
up
you?
on my bad. How you doing?
Okay. I'm good.
Good.
Hey, so my question is, and I don't know a lot of details, what do you think of a financial advisor using a company like Horner, Turner, and Kent? Do I have that name correct?
Wow. That would be a name I've never heard of.
Are they right next door to Dewey, Cheatham, and Howe? I thought I knew them.
How about Royal Allegiance?
It sounds like an insurance company.
Yeah.
Hold on. Give me the first name again. Give me the first name.
Horner, Turner, and Kent.
Turner.
I can't say is how I know them.
And I'm looking them up.
Oh, okay.
I'm looking them up. Horner, Turner, and Kent. That's a law firm. Whoa, I'm very confused because... Oh, wait, no. Oh, I'm sorry. I'm reading this wrong. These are law firms who are suing.
No. All right, hold on. Let me get it right.
Horner.
Is it Horner?
Right.
Horner?
No, I think it's, yes,
HORNE?
NER.
Okay.
Wait, HNER?
Yeah.
That doesn't spell anything.
All right. I'm going to look it up and I'm going to call you back.
Oh, wait. Give me the other name. I'm going to look up that other
Allegiance.
one. What was the other one? Allegiance?
Oh, okay. It's not Turner. It's Townsend.
That's them.
Okay,
They're
how about that?
Horner, Townsend, and Kent. I'm reading this is from a law firm. And oh my gosh, you should never go anywhere near them. They're being sued all over the place.
For what?
They have so many violations with the SEC. Oh my goodness. Look at them all. No, run away from this person.
What are they being?
Oh my.
What are they in trouble for?
Let's see. Letter of acceptance, waiver, and consent. They were fined $150,000 for deficient supervision, $50,000 for selling mutual funds that gave preferential treatment to someone else. Failure to supervise. Bad variable annuity sales without disclosure. Unsuitable investment advice, securities concentration, fraudulent misrepresentations and omissions of material fact, breach of fiduciary duty, conflicts of interest, variable annuity switching. Sounds like somebody's trying to sell you some variable annuities.
Okay, so run away. Okay, thank you.
Run away. I'm literally reading this from a law firm's website. Go look it up. Go type them in to the internet and look. The first few hits are all law firms that have been suing them.
Where are they located?
They're somewhere. I can tell you. They could tell you. Headquartered in Horsham, Pennsylvania. They're owned by Penn Mutual Life. Run away.
Run away. All right.
And don't just run away from these firms. Run away from the person who suggested these firms.
Really? Okay.
This is not a reputable person. They may be nice. This is one of the problems in our industry.
They're all nice.
Is that everybody who sells this stuff is like your buddy, your friend, you go to church with them, they're related to somebody, they're all so nice. But I can tell you, if this person sells stuff from that firm, they're not very good at what they do.
Karen, we wish you well. Thank you for your call. We lost Joey, by the way. He got so angry that I said to go to him, and then it wasn't his turn. I guess he just took off. I'm reading the FINRA stuff now. Oh, my goodness, this is not a nice firm. So is it a duly registered, like RIA broker-dealer or something, or what's the deal?
I don't know. I haven't even been to SEC
All
yet.
Right, well,
I'm going to do that during the break.
I'm going to promote this again. Coming up, Congress tells you how to invest. Well, not quite like that, but should you take investing lessons from potential members of Congress? Make it that way.
Yeah,
that's coming up.
Think about that for a minute. 855-935-TALK.
We're talking real money.
If you don't have a financial plan, well, sometimes you just need a little help getting started. And we offer that free help to anybody in a meeting with one of our fiduciary advisors. To set one up, just go to vestory.com, vestory.com, or call 800-386-3004. There's no obligation, no cost, and I promise, no sales pitch.
For your real life and real future, Tom and Don are talking real money.
Hey, welcome back to our little get-together called Talking Real Money. I'm Don McDonald. Over there is my partner and longtime associate and friend, Thomas Seacock.
Let's not get carried away. I'm actually at the station today for the first time in 6 months, and you're surprisingly in a bridal suite you took over or something. I think this is a very odd combination. Let's just say
at the lovely Burke Manor Inn in Gibsonville, North Carolina, a vacation hotspot.
All right. And we got people waiting for us, so let's do it.
All right, let's do it. 855-935-TALK is our number. Robert, you're on. Welcome to Talking Real Money.
First of all, Don and Tom, thanks for taking my call. Just a simple question, please. I just currently retired, and, of course, I've been blessed to have a beautiful 401k in Financial Engines through the Boeing Company. And my question would it be advisable to roll that into an IRA outside of Financial Engines, or would it be value added just for me to keep it as it is?
Well, do you want to manage this on your own, or do you want to have someone help you?
Well, I'm not a rocket scientist. I would prefer someone else to manage it.
Okay.
Are you sure you're not a rocket scientist? You work for Boeing.
Yeah.
Could you be an aerospace scientist? Maybe something. I'm kidding.
You could say I've been blessed. I'll just leave it at that. And
good for you.
My money has worked for us very well, but through all the uncertainties in life right now, as many people.
Well, we don't have any issues with Financial Engines.
No, we like Financial Engines.
We like Financial Engines. They're one of the fiduciary firms out there that we like to see people have managing their investments. We want to see you with a 100% fiduciary firm. And Edelman Financial Engines is that.
And the costs are generally pretty low. And here's the only issue, and the diversification is pretty doggone good because they line up with what we believe. Here's the only little thing I got sometimes with 401ks to get the money out. Oftentimes 401ks require withholding, I think it's of 20%. So, and oftentimes people's tax rate is not 20%. That's a little thing. But if you just want to have the money managed, here's the problem. Once you go to an IRA, it's the Wild West out there. I mean, anybody could sell you a lot of, I've been looking into it, sell you a lot of bad stuff. So I really have no problem with continuing that way.
The fact is you're already with a good fiduciary firm. And as Tom said, that's a great response. When you go out on your own out there to find somebody to help you with your IRA, you could get an insurance agent selling one of those awful companies that flips annuities like the one we were talking about apparently. You could get a stockbroker who charges huge commissions and is always trying to put you in the latest hot thing to generate commissions. You've got somebody who's great. Why not stick with it?
Great points. Gentlemen, I wish you all and nothing but the best. Thank you.
That's very kind. Thank you. Yeah.
Appreciate
it.
All right.
I'll do the phone number because I got to get ready since you're departing. 855-935.
Well, I might or might not. It depends on the bride and the groom. Why
does it always have to be a big
there?
Mystery with you? Why can't you just make a decision and stick with it?
Because I don't know when they're going to be back.
Well, what's the big deal? They can sit behind you. You do the show in the foreground. They're in the background. It's all fine.
I am not interrupting someone's wedding night. I'm just not doing it.
All right, let's go back to the phones.
Yeah.
And
whatever.
Lucy joins us. I hope I have this right. Lucy. Hi, Lucy.
Oh, hi. Thank you for taking my call.
Our pleasure.
I am 90 years old.
Congratulations.
And I was wondering what you think about the Franklin Fund. I got lots of Franklin Fund. Is my money in a good place?
Well, here's the thing. You've already paid the commission, so that's done. You paid whoever sold these to you, made a nice commission on all of these. The problem I have with the Franklin funds is that they're very mediocre. They're actively managed, which means they are trying to pick the best investments to be in, which no one can do. And they're expensive on an ongoing basis.
Here's the issue you face, Lucy. If you're waking up at 30, no offense, and by the way, I think 90 is a great accomplishment. It's one on my list if my health holds up.
I'll never make it.
If you were 30 and you were called us and said, should I invest in them? I would say no. There's a lot better options. But the fact is you're 90. You have some sort of cost basis in these funds. So if you went to sell them, you'd have to pay the tax on them. I just wouldn't mess around with a whole lot. I think they're probably okay.
I would say they're okay. They're okay. Don't ever add any more money to them if new money comes into your life. But for now, I would just leave them alone because tax-wise, it's going to be a nightmare. Getting them invested somewhere else, as we said, is depending on who you talk to, could be a nightmare. So I just leave it alone. Don't worry too much because they're not that expensive. They're not that bad. They're just mediocre.
Do we have time to squeeze one more in here?
As far as I'm concerned.
Okay, Lucy, thank you for calling. By the way, I hope you still had a nice 90th birthday party, even though we're in the middle of this whole thing.
Stupid COVID.
Because that's big deal. 90 years old. All right, let's go back to the phones. Perry joins us.
Hey,
Hi, Perry.
Hi, how you doing, Bob?
Good.
I got a question on the law of averages. Does that still apply to the stock market? As in, say I got 30 years left of it investing, but if I had 15 years left, does my average get worse off?
You know, here's the thing about that.
Reverting to the mean, that kind of thing.
Here's the thing about that. There is a lot of work done about sort of when you retire, because people that retired in 2008 and then started taking the money out, well, that was bad timing, or 2000, or et cetera. But in terms of sort of saying, well, if I retire today and I put this much money in and I have it balanced this way, how much should I expect to make in the next 15 years? There's going to be many people who are going to tell you 15 years is a very random period of time. It's not enough time. So I'm trying to make sure I'm sort of answering the question about law of averages.
Here's what I think. You're going to be withdrawing money from your retirement funds over a long period of time. And the market averages out to some very impressive numbers given enough time. And with a well-balanced portfolio, you will find that there have rarely ever been 5-year periods where you would have lost money 1-year periods, yes. 5-year, no. 10-year,
Remember, by the way,
not with a diversified portfolio.
Day-to-day stocks are only up 51%, down 49%. Month-to-month, it's about 75% of months are up, 25% are down. So,
yeah. So it'll average up.
And when we run a plan for somebody, I think we run 1,000 for like a 1,000 simulations to say, here's what could happen. And even that, who knows? I mean, you did a great podcast on one saying the market average is 9.7% a year, but it's never actually done 9.7 in 1 year. It never does. So it's in there somewhere.
But the fact of the matter is, though, even that poor person who retired in 2008, who took 4% of their portfolio that year, did the next year, their money recovered. The next year, it recovered even more.
The key is to stay the course. And you take the money out of the bonds instead of the stocks. That's why you have the bedrock.
And the law of averages is when it comes to investing in the stock market, it's on your side because our averages have always skewed higher.
And remember, we only have like 95 years of data.
That's all.
That's not that long, actually, in the big picture, because people think, well, the last 6 months.
Actually, if you go back and you look at the Dow, you've got 120 years of data.
Yeah. So, because
140 years of data.
Man, been around for a long time. You know, things have a tendency to increase, populations, economies, that sort of upward motion has helped being invested. I'm very grateful, by the way, for the fact that I get to put my money, expose it to all these other hardworking entrepreneurs who are making money and putting money in my pocket. I think it's a wonderful thing.
They're working really hard for you.
Yeah.
And you never thank them. I never hear you thank them.
I said, I'm grateful. Thank you.
But you need to write a letter to Jeff Bezos right now during the break.
How about Adam Newman?
Dear Jeff.
I'll try that.
Dear Jeff, thanks for helping. 855-935-TALK.
Tom and Don are talking real money.
If you don't have a financial plan, well, sometimes you just need a little help getting started. And we offer that free help to anybody in a meeting with one of our fiduciary advisors. To set one up, just go to vestory.com, vestory.com, or call 800-386-3004. There's no obligation, no cost, and I promise, no sales pitch.
Your guides to a really great financial future. Tom and Don are talking real money.
And by the way, if you need some help with financial issues that are a little more complicated, that take more time than we have on the show or the podcast, you are always invited to talk with one of our advisors. It's free, no obligation. We're not going to manage your money for free, but we will help you out for free without a sales pitch. Just go to vestory.com, vestory.com, and set up an appointment or call 800-386-3004.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That's a wrap.